Hey traders, today is Wednesday, February 25th, and I'm Michael Boutros, Senior Market Analyst with StoneX, here for a quick multi-time frame look at the Canadian dollar. So we've rallied 1.8% off of the yearly low, rebounding last month off the 2024 August low close. And that recovery of 1.8% is now trading right into yearly open resistance. There's a major pivot resistance zone that we're trading into right now at the monthly high, the objective yearly open, and a 38.2 retracement, the entire advance off of that November high. That level's 137.24 into 137.33. The weekly opening range is snugged up right below that, and we're looking for a near-term breakout here to offer some guidance. So on the weekly chart, you're looking for support at 136.17. That's the low week close, but that also happens to be the objective February open. So that's your meaningful support on the weekly chart, meaningful resistance on the weekly chart. Drill down to the daily. Here's what we're looking at. The entire monthly opening range is set right below this cluster of resistance. Again, that's the 38.2 retracement. You also have the September and August swing lows alongside the objective yearly open. All of that defines the February opening range high. We're heading into the last couple of days of the month. That's the breakout we need near term to keep this advance going. Now, you really need to close above 137.60 to validate a more meaningful low is in place and a larger trend reversal is underway. That's the 618 retracement of the year-to-date range, namely the January decline. So you can see if we break through this, it opens up the potential for a rally towards 38, 38.10. You're looking at the 50% of that November decline, and also the 200-day moving average sits right up there. Here's what it looks like on the 4-hour chart. So we've been working with this near-term uptrend off of the lows from February 11th. You can see that 75% parallel also converges on this key resistance pivot zone, really highlighting the time value of when this level matters into the close of the month, into the close of the week. So initial resistance, breakout level 37.60. Northbound of that, you're looking for a larger recovery towards 138. Initial support at the objective monthly open. Remember, this is also the yearly low week close here at 36.17. Ultimately, broader bullish invalidation, or the level of which, if broken, would put the bears back firmly in charge, is down at 35.75. That's the February low day close, the day that the low is registered, the close of that session, and also a 618 retracement of the advance off of that January low. So the levels are really well defined. Right now, the immediate focus is a breakout of this weekly opening range set right below resistance. We're straddling the weekly open, so we're looking for a breakout of this range later this week if we're going to get a near-term move here on dollar CAD. Now, there is some event risk on tap. We do get initial jobless claims on tap tomorrow from the United States. The bigger print will be heading into Friday. We get those producer prices and another update on the inflationary outlook for January. We are looking for a bit of an easing. Core PPI is supposed to come in at 3% after a previous read of 3.3. And we also get from the Canadian side an update on the Q4 GDP figures. Those are expected to come in flat after a 2.6 print previously. So right into the close of the week, right into the close of the month, into the monthly cross, we do have some event risk, and we'll want to see definitely how the weekly close materializes to validate any breakout that you do get. One other caveat we're seeing is that interest rate expectations from the United States are getting kicked out. So for the longest time, we've been looking at the June print as the potential likelihood for the next rate cut. That's now below 50%, 46% expecting that we'll see a rate cut in June, 54% suggesting that we won't, pushing it out till July. Now, this is giving a little bit of a buoy for the US dollar. We're giving a little bit of a lift there, keeping the dollar in play. But something you'll want to keep in mind definitely as you head into the close of the week when we get those updated PPI figures and that last inflation print of the month. Don't forget, non-farm payrolls are on tap next week for an update on the labor markets. Stay nimble into the monthly cross. Till then, we'll try to keep you updated as always on MB Forex. Best of luck trading. We'll see you tomorrow. Cheers.